Hey guys, I'm going to talk about the markets again and go through some scans that we can do to find the best performing sectors and stocks, as I usually do. I show different things within videos, different aspects and things that you can do for yourself, so you can make your own scans unique to yourself and what what you want to use. So I use TC2000 here. It's very powerful, and I suggest you guys check it out. If you want a free trial or $25 off purchase, you can check out the link in the description. I've got the gold plan, and I use real-time data, US real-time data, so there's no delay, and that gives me access to the pre-market prices as well. If you've been watching my videos, you know that I have a tab here which has the markets, the general overall markets, and if you've watched my last couple of videos, at least you've seen that I had some concerns with the market, and that's because there was this cross of the momentum. A lot of people use MACD. This price percent oscillator it kind of makes it more comparable from one index to the next. So it's a bit of a better reading here. And what I wanted to also point out was that in this particular tab down here, you can set up different views. It can have all sorts of different views. Fundamentals of the stocks, like this price to earnings. You can have multiple charts on one page. You can have different moving averages and just a bare chart with nothing on it, just the price. Or anyways, on this chart I've got Heiken Ashi candles, and so if we click on edit for that price, you can see that it says Heiken Ashi. So you can normally use candlestick, is what I like. And what Heiken Ashi does is it sort of averages out the candles from a previous day. And you can look into that if you want to Google that and check it out. But it kind of smooths out the chart. So if you're getting stopped out a lot and getting scared when you see a little bit of a pullback, this can be a way to reduce that insecurity there. So the other thing you'll notice is these dots, and these are volatility stops. So they kind of take into account the average true range. So it kind of takes into account the ups and downs and the wiggling of the stock, of the price of the sector, or whatever you're looking at. So you can just kind of keep an eye on this, and when it crosses down through from green to red, you could potentially sell at that point. You can also scan for things that have switched from red to green, or that are in the prices above the green dot, and I'll show that in a minute. And so I really like this because it kind of shows areas where you can make a nice swing trade, and there are some areas where you get a switch and then it doesn't really persist, like the green dots. The uptrend doesn't really persist, and that because you need to look at other factors, like not just one thing. So for example, you're below the 50 days. So a lot of times, you see a bounce off the 50 a couple of times. So you wait till it breaks up over the 50. The other thing is when you look at this price percent oscillator, you notice that it doesn't really cross up, and it's also below zero. So zero is like the line where usually when you're above the zero line point, you have a good uptrend, or you were in an uptrend and it's coming back down. But so you could wait a bit longer for it to cross up over zero, or you could wait like around the time it gets above the 50. So these little spots here, you don't necessarily have to jump right in just because it switched from red to green. But anyway, I was going to talk about the markets. And so like I mentioned, here's the Nasdaq. And I was concerned because this momentum was kind of flat here. The other thing to notice is how high it is above the zero. So when you get to 1 or 2, above 1 or so, you can still go up. You can see here, even though this came down, it was going up. That's like a divergence in the momentum versus the price of stock. But when you're up in this area, you should be a little more cautious, in terms of when you might want to get out of that situation. But when you get down here, like when you look down here and you're down in the range of -1, is you want to start looking for opportunity for a reversal. So obviously you have a cross here, and you could wait like I said, until it gets above 0, the price percent oscillator, or above the 50, which is kind of the coincidental point. But you can see here that we're down 1%, and we were down yesterday as well. But we're still a little bit, we're just above this dot. So you don't want to sell. You can see here, like it got down below the green dot. Like you wouldn't sell during the day, right? When it crossed there, you would wait. And of course it gets pushed back up again. So, you know, we have a cross down here, which is worse than it was here. So I'm going to wait myself for a, you know, to see what happens, because this is a bit extended in my opinion. If we look at IWM, some of these are in worst case scenario, shape. You can see that we had this cross here. It wasn't quite crossing the green V stop, volatility stop, but now we've gotten down, and you know, there's 50-day moving average here. We'll see what happens. There's also a trend line that's been, you know, is a bit steep off of that, and it may return to that point. But you know, we have this downtrend in the MACD, or price percent oscillator. And the other thing that can happen is, like, if you're looking at the index, say right here, and you have a bit of a history here, you can draw a line, you know, like this, and sort of wait for it to cross that line. So, you know, even though you see a green thing and it's above the 50, because you have this recent series of lower highs, you know, you might want to wait for it to cross that point. So, you know, there's different entry points. Like right here, it turned green, but there's a, you know, kind of a resistance line with this trend here. And so you could wait a bit longer to get in. But right now, these aren't in a great state, in my opinion, because of the multiple factors. Red candles, below the red volatility stop, downward momentum. So you want to see it curl around. In Canada, we have the Toronto Stock Exchange, and similar, it's crossed down momentum, a downward candle, and we've broken this green dot. So I will not be, you know, I wouldn't be getting in there at this point. S&P still above its green volatility stops, but downturn, a little bit of a downturn, and the momentum is declining. So, like I said, not looking good from my perspective. And finally, the Dow Jones, same thing. This is pretty bad shape. Many down red candles below the red volatility stop, cross down of the momentum, or PPO. So personally, I don't like the markets the way they look. Of course, we are above the green volatility stop for the Nasdaq and the S&P, but with this little bit of a decline. You can have a rule that says you don't buy unless there's an upsloping MACD or momentum, but you know, you are above the volatility stop, but you're quite a ways from the 50. So it gets up pretty high away from the 50, comes back down, and now we're quite extended off the 50-day moving average. So that's kind of my market outlook. Like I said, I don't really like the way it feels right now, and I've said that for a while now, like a few days at least in the videos, if you want to check out my past few videos. So on another tab, so what I like about TC2000 is I've got multiple tabs here. So it's very condensed data. So each tab is a different set of stocks or ETFs and scans. And so if I click on that, what I have here is, instead of the markets now, I've got all my sectors ETFs. So what I've done over time is I've added ETFs to a sector ETF watch list that I personally like. So like, for example, if you're looking at the financial or if you're looking at solar or whatever, there's going to be a whole bunch of ETFs usually for each particular sector. And so I pick kind of common ones with usually a lot of volume, and if as much as I can, and in a variety of things that I discover over time. So it might be more obscure, like wood is the timber, and there's agriculture, and there's regional banks. And if I turn off this scan for a second, you got uranium, you got coffee, of course, all the regular ones. But if I've discovered anything interesting, I usually add it here. So you've got, like retail, soybean, jets, which is the airlines, Merrill cannabis, you know, cars like hail, electric vehicles, biotech, the ARK. There's a whole bunch of ARK ones in here. This ARK Space, ARK Finance. Those aren't looking very good. So this is a list of the ones that I've discovered that I generally like. And for the most part, they're unique. Like I don't have a lot of duplicates. So I just, instead of scanning all the US ETFs, which I do on occasion, whenever I find interesting ETFs that I think I might want to get into at some point in time, just reflects different things, you know, then I add it to this list. If we click on the scan button, I've got a scan already in there, but if you click on that, you can add as many different conditions like price history. If you don't want to look at stocks or ETFs below a certain price, and then when you go to add, can choose a condition. There's a whole bunch, and I've created a whole bunch of conditions myself, custom conditions. So one of the things that I've done is when the price is above the V stop, and that is the green, these dots. So I want the price, obviously, when the green dots, the price is above, and when the red dots, you'll see that the candles are below. So what I'm looking for is, in this particular scan, is ETFs that are above their green volatility stop. So that gives me potential, ETFs to buy. Like I'm not gonna buy ones that are red. That's just my rules. So let's take a look at something. We have coffee. And so what I do a lot of times is I think about where should I have purchased this if I didn't. And so when it switches from red to green, that's an obvious potential entry. But when you have this like series of red, and you can sort of see like a downtrend, in my opinion, is like this. And it just happens to coincide with a crossover from red to green dot. So that's the entry. So a lot of times I'll put an arrow like this, and that tells me like where should I have purchased. And so if you're going to purchase when it turns green, you have other criteria like a cross of the MACD. You'll notice here it was always below the moving average, so you never really crossed over. And up back here is another entry point. And what'll happen is you'll get these scenarios where it'll go red. And so what you need to ask yourself is, are you going to sell as soon as it goes red, or are you going to use some sort of moving average? So like, because this purchase is right at the 50, I could say, or even the 21 exponential, I could say that I'm going to keep it if it's, within the exponential. So I might have had to sell. So for example, even if you sell and buy, like, you get stopped out a couple of times, but then you get this ride at some point, you get big rides like that. And so you can come up with some criteria to make it a little less, you won't get in as often, just to kind of minimize that, or you won't get out. So if you've purchased it here, you might decide to stick with the 50, or you might just, but usually these are small losses, and then you'll ride up the bigger gains. So there's a view here. If I take off the scan, so let's just talk about the scan. So what I did was I said, price history above the green volatility stop. If I wanted to, instead of above, I could say crossing up. And that would give me, it's not perfect exactly, but it's close, where you switch from red to green. So that means the price is switching from below to above. Now during the day that can vary, if it goes up and down, but you get close to where you might want to purchase, where that green dot would be initiating. And you also notice, like, a lot of times that happens to be when the price percent oscillator crosses over. So you can also use price percent oscillator crossing over as a condition. What else? One other quick thing, I've mentioned a lot of these things in other videos, but I just want to sort of hammer home the points that you want to scan and find these stocks or ETFs that you like, and you don't really want to be like clicking around a lot. And like I said before, like if you have a utility or whatever ETF, if you click on this related items, you can see the individual stocks. So you might decide to purchase the stock instead of the ETF itself. So that'll be up to you. Like Next Era is usually a good one. So if the sector looks pretty good, then you can decide to just purchase the stocks. And then one other thing I'd like to mention is I've added this relative strength. So what you can do is right click and say add a plot, and then you go, if I said relative strength, you'll see versus the S&P 500. And then I edit it by clicking on this arrow. Once it's on the diagram, on the chart, I just go in here and edit that symbol. And I'm using a Canadian Nasdaq. But you can use the QQQ instead of the S&P 500. And then what happens is you'll see like what the relative strength is, because you don't just want to buy, in my opinion, stocks or ETFs that look good on the chart. You want to see if they're relatively strong, like better than the Nasdaq or S&P 500. So I try to find the best stocks that or ETFs that are not just for a day or two, but have a relatively high relative strength compared to the Nasdaq. So you're not just buying anything that looks good on the chart. Okay, I think that's enough for today. Like I said, I love this program so much, so I talk about it a lot, but TC2000, you get a free trial or $25 off. I get a bit of a commission, and that helps out the channel, and you don't have to pay any more for that. And I've got the gold plan with the US real-time data, so I don't have to wait 15 minutes for the prices. And that gives me access to pre-market and post-market price information. So if you like that, check out the link in the description below, and there's some other links in there for other stuff that I use as well. And we'll talk to you in the next video.